Hey everyone, welcome to BRICS Briefs, your go-to spot for everything BRICS. Before we dive into today's discussion, and while we wait for everyone to join the live stream, don't forget to follow our Telegram channel. I'll just bring that up for you. There you'll find all the latest news about today's topics and much more about BRICS news. So stay connected and never miss an update. In this episode, we're diving into some technical topics around BRICS trading, BRICS currencies, BRICS payment systems, and BRICS financial independence. We know it sounds like a lot of economic stuff, but we'll keep it as simple as possible for everyone. We promise it will be very interesting and engaging, so please feel free to comment and ask questions in the live chat. We'd love to hear from you. We've got a special treat for you today. Veteran journalist and statesman Rhod Mackenzie from SCOBRICSinsight.com is here. Let's bring him on.
Hi, Clive.
Oh, hi. Okay, I'm messing with my things here, sorry. There we go. Okay. All right, awesome. All right. I'm doing this all by myself. Yeah, you too. So yeah, let me just show that again. So many of our loyal viewers are already familiar with Rhod. Make sure to subscribe to Rhod's YouTube channel. So it's at SCOBRICSinsight for more great content. All right. Okay, and we've got, joining us as a special guest tonight is Terry Boyland. Terry is a standout professional with over 25 years of senior level experience in investment banking, digital transformation, and technology across the Americas. He's the founder of Firma Economics Limited and was the CEO of CPQI Group. Terry has also held significant roles at JP Morgan Chase and has a strong presence in the tech sector, having been instrumental in establishing the technology hub in Fortaleza. Terry's extensive background makes him the perfect expert to help us unpack tonight's complex topic. Our partners at BCCI Brazil highly recommended him for this discussion. All right, hi Terry.
Hey, how's it going? You Zan?
Good,
Good
thank
morning,
you.
Brazil.
Oh, good morning from Brazil. Excellent. Yes. See, we got Brazil on the BRICS. There we
We're
go.
10 o'clock here. It's like global community.
Oh, great. Thank you very much for coming. We really appreciate your time.
Pleased to be here.
Excellent. I think we're going to have a good discussion. We've got two veterans. So I just wanted to warn the audience. We might be going a bit long, and I'm going to muck up the controls of different things. So just bear with me. Feel free to comment about how much I suck at this. It's totally fine. I love it. Okay. So let's get into it. I'm going to sort of be prompting Terry, and we're going to have a discussion. So that's basically the format today. It's a little bit different from what we usually do, where we usually have articles, and we get a bearing on what Rhod thinks of the topics of the events. So this is going to be a little bit different. I've got a few articles, but nothing very deep. We really want to have a discussion. So, Terry, I estimate from your bio that you come from a traditional economics background. What brought you to engage in the BRICS initiative?
So I come from a banking background. Spent quite some time at JP Morgan, other financial institutions. I've had the privilege of working with teams that have provided some of the leading banking technology over the last 15 years. I guess Brazil was a place when I was a little kid. I always used to love the Brazilian flag. I had this thing about looking through encyclopedias to figure out which countries had which attributes and what their capitals were. Brazil, for some reason, always seemed to stand out. So over the years, this interest in Brazil grew into part of my work. When I was at JP Morgan, like many organizations, we led a lot of the technology initiatives to export work to India, a fantastic country, got the utmost respect. India, of course, for the UK is a 5.5-hour time difference, and the Indian technology industry is one of the leading industries in the world. But when you get across to the Americas, then you end up with a 10.5-hour time difference, which is a lot more difficult to manage. And of course, as organizations begin to move towards more agile development methods where people and teams have to be awake at the same time, so the 10.5-hour time difference becomes a bit of a problem. So my initial business down in Brazil came through the CPQI company. We set up offshore capabilities in the northeast of Brazil, and then further through into Sao Paulo and Rio de Janeiro and other areas to provide banking technology within a similar time zone to the Americas so that the teams could collaborate together at the same time. And from there, I love the country. So that was 2010, I moved down here. I did move out for a little bit during the difficulties that Brazil suffered a few years back. I've been back in Brazil now for a year by choice. I love the country. I love the fact that it's part of BRICS. And I think Brazil has a lot to offer.
Oh, so you're originally from which country?
I'm English.
Oh, you're English. So from England?
From England, from the UK.
Yeah, that's what English normally means, Clive.
Yeah, actually, we were just having that conversation. Like UK, like there's Scotland and Ireland and England and Wales. But yes, no, that's good. Clarifying, that's good. Because I actually thought...
Yeah, it's interesting, Terry, that you did the sort of offshoring that the UK had done to India, to Brazil. I wasn't actually aware that they had the same level, or perhaps not quite the same level, but a large part of that is America's offshoring to Brazil. Is that a major thing these days?
So obviously not as much as India, and during COVID, a number of things changed as well. Organizations began to see that they needed to have protections in place in the event of global pandemics like that, both from supply of physical things, but also as the work slowed down or as people became ill, then being able to provide a lot more control became important. So reshoring back onto the domestic shore became quite important. And Brazil, along with other countries, saw a little bit of a dampening of demand for a while. But now it's becoming ever more interesting, the Latin American market, not just Brazil, of course. Major companies like Global down in Argentina are players within the offshoring business. Here in Brazil, large organizations like Stefanini and BRQ also provide resources for organizations globally.
Okay. It's interesting that, I mean, obviously Brazil will have learned a fair bit. I mean, India is the largest offshoring in technology in the world. I mean, it makes up something like 10 to 12% of its GDP. You know, it's that big. And some of their technology companies that are involved in that, in fact, one of them's daughter, is married to the Prime Minister of the United Kingdom.
Yeah. So the Indian market is phenomenal, and as I say, I have the utmost respect for it. I think, Rhod, one of the things that's really interesting when we look at technology and BRICS in general is the ability to work across different cultures, and each culture has its own way of approaching business. And for certain countries, certain types of cultures are quicker and easier to learn than others. Brazil actually has a culture which is far more aligned to the European and North American cultures than seen out of India and out of China. That's by no means to denigrate the fantastic work that they do. But when it comes, for example, to appropriate challenge, like a requirement is sent to Brazil, they'll take a look at it, they'll come back with some suggestions, they'll have a bit of a debate. But then when the organization that's the client turns around and says, well, it needs to be done this way, they'll do it that way. Or they'll try to make suggestions, and that really helps. English, of course, a challenge for all of these countries, including India, despite the the comments that are made publicly, they're not the national languages for most countries, but it's ever improving, and at the higher levels of education which technology requires, then English is fairly common.
Yeah, I mean, Terry, I think you're absolutely right there with certainly the technology world. English is the language. I remember back in the 90s where most of my techies who were Russians had never studied English, had learnt it from computer manuals. So, you could say words, everyday words in English they didn't have a clue about, but they knew everything about thermodynamics or programming.
That's helpful. So it's not just a language, not the language per se, Terry. It's that they're familiar with the system, expectations.
So the way that Brazilians work is very similar from an expectation perspective, as I mentioned, to North America.
Oh, that's interesting. Okay. Well, let me. We titled this episode from a quote from you, Terry, and this is a really good quote. I really like this. So this is an April 2024 edition of the BCCI newsletter. Quote: BRICS Plus is not about control. It is about freedom. The freedom to trade in national currencies, the freedom to determine and execute national fiscal policy, and the freedom to settle transactions without having to go through third-party currencies. End quote. Given this perspective, how can any country trade in national currencies when their credit creation is controlled by private, independent central banks that set a single cash rate for all purposes, whether it's for legitimate infrastructure projects or illicit activities like money laundering through real estate? So
they're going to put money laundering to one side with that comment, because obviously we're not supporting that. But so from my perspective, what does the comment lead to, right? So we're not talking about countries trading their own currency. What we're talking about is that governments have a responsibility to create the best framework that they can for the economic and social progress of the people that live within their country. And part of that framework is providing the ability to trade within a way that's freer, easier, and faster to do. So when we look at the contracts that are struck globally for most of the world's major commodities, by commodities we're talking about oil, soja, soy, coffee, gold, all of these contracts are predominantly contracted in American dollars. That's the way that it's always been. So if you want to manipulate world inflation, or if you want to manipulate world inflation, or if you want to artificially create a pseudo economy, then maintaining the dollar either artificially high or artificially low reprices commodities contracts because they're all done on the dollar. Why is it not possible for an organization, for example, in China, that wants to buy soy from Brazil, to agree to do that on a price that is either Chinese yen or is Brazilian real, and to perform that settlement in their domestic currency pairs in agreement across a network that is not a network that is controlled by a third party? And I'm making reference here to SWIFT. They should be able to simply agree the economic conditions between them and perform that transaction. The problem in the past has been, how do you go behind the scenes afterwards and effect the confirmation and the settlement and actually receive the payment and ensure that the products were delivered properly? But now with the modern technology, which we'll talk about in a little bit, the things are changing. And because of that, there is now an ability for organizations to be able to choose the currency, to have that currency tokenized, for that currency to be passed to another country, to then be put back into the economy of the other country within a trading pair that does not include the American dollar. Yeah. The other aspect with the American dollar is not only is it the base currency for many commodities transactions, but many countries do their foreign exchange always through the American dollar. And Brazil is an example of that. If you wanted to send your Australian dollars over here, then you would send them to your bank, you get an FX rate, but actually the transaction goes from Australian dollar through to American dollar, and then it goes into Brazilian real. So we have a double whammy. So we can bypass all of that by using what is rapidly becoming more.
The other important thing there, Terry, is the US control. Is if you want to try and do a transaction between the Australian and the Brazilian, it goes through an American, what is known as a corresponding bank, right? And the transaction can't happen without a corresponding bank. And that's where the US has now controlled, well, it's got rid of, kicked Russia off of SWIFT, it's done it to Iran, etc. And it's now threatening Turkish banks and banks in the Middle East, as well as India and China, with action. And that's how they can do it, because, as you mentioned, the transactions are not Brazil to Australia or vice versa. It's Australia to the US to Brazil, or Brazil to the US to Australia. So I just clarifying that for those who are watching to fit in with what you were saying.
That's excellent. And then there's another aspect, Rod, that's changed more recently. So in the past, and I'm not an economist, I just need to say that, but in the past, there was almost a direct correlation between the price of commodities. When commodities went up, the US dollar went down. When commodities went down, the US dollar went up. It was, if you look at the graphs, you can see that correlation very, very closely for many years. After COVID, that's now changing. We have commodity prices that are going up, and we have the US dollar, which is probably about 15 to 20% overpriced. And one of the drivers behind that is the fact that the US government is one of the few to yet reduce interest rates following the high inflation that came out of supply chain issues during COVID. But because it's now 15 to 20% higher than it realistically should be based on commodity pricing, so that's more expensive for the rest of the world. But the Americans doesn't make a difference, right? Because it's all priced in dollars. So there needs to be a reset of how we price these things and which currencies we can use.
I think that's definitely going to happen, Terry. I mean, we talk about this on this program frequently, about the events of Kazan in October. And I mean, prior to last year in Johannesburg, they were all talking about the gold-backed BRICS currency, and I always doubted it would happen. I'm sure you did too, and it didn't. What I'm expecting now to happen in October is the actually announcement of the whatever it is. Whether it's a blockchain, a unit, whatever. It will be a trading unit and a way of trading between the members of BRICS, BRICS Plus, and those who want to trade with them. I mean, it's not something that's, I mean, you mentioned the dollar, but you're old enough, like I am, to remember the European monetary system in the early 90s, where the franc, the days when Europe had multiple currencies, which is not that long ago. It's only, 25 years since the euro came into existence. We had a system where the Deutschmark and the franc and the dollar and then the pound, etc., the drachma, they all changed on the European monetary system, and they had a value against each other that wasn't against the dollar. There's nothing to stop that being the yen, the rupee, or the 5 R's as we call them, the real, the renminbi, the ruble, and the rupee, etc. Now, and put against their individual currency against a basket of commodities. I mean, the Central Bank of Russia publishes every day its price for a gram of gold. Currently, it's about 7,000 rubles, right? Now, that is different to what the market price that is set in London by the 5 controllers of the manipulation of the London bullion market, So it's not something, it's not rocket science for India, Russia, and China to agree that the oil price on a given day for SOCOL or for Urals crude is going to be $83.55, no matter what the price of West Texas Intermediate or Brent rate is.
Crude is, exactly. And these are trading partners. So, coming back to my comment, governments have a responsibility to create a suitable economic framework. But that's for trading organizations, for companies to execute their contracts. And they should be entitled to do that at the price that they feel is appropriate. And to an extent, to agree, and I'm sure we'll talk about manipulation of foreign exchange rates and the need for some level of stability, but to some extent, they should be able to agree what that foreign exchange rate is within their contract, which of course can be done with smart contracts within a block.
And I think that given the relationship between the central banks of Russia, India, and China, and given that all three of them are now in the top 5 of by purchasing power parity economies, I think they are beyond intimidation by either the European Central Bank or the Federal Reserve, who don't exactly have a lot of power at their elbow for financial interventions.
Yeah.
Well, I mean, that's interesting because you guys are bringing up this point, which is sort of where I was going with that question, with the central bank sort of intervening. Because we have this issue here in Australia, the senators in our government are harassing the central bank, right, because of interest rates, which you mentioned, Terry. They are independently controlling interest rates, and everyone's very unhappy. And the senators are representing the constituents, but you have this where you mentioned the countries. Then you have private businesses who are trading because they actually do this work, but then the central banks, how come? I guess it's not really a question, but just a bit of a comment from what you guys have said. We do have this issue though, right, where it's the central bank is not the government, and they're supposed to be independent. They're private. Do you think that's going to be?
It really depends on which central banks you're talking about. I mean, Nabiullina in Russia is surprisingly enough popular in the West as well as in Russia. I mean, she's not universally popular in Russia, but she's respected for what she's done. I mean, having rates at 16% hasn't endeared her to a lot of people. But again, the Bank of England had those, I remember, when I was paying a mortgage in London in 1992. So, it's a bit of pain at times. But they're far more independent politically than, for example, the ECB, the European Central Bank, and the Federal Reserve in the United States. I mean, the Federal Reserve is basically, dependent on whoever's in power and what they want in time of an election.
Yeah, I mean, the independence of central banks is relatively new. I'd say that in the overall scheme of the monetary system. The elements, as we know, that affect the economy, and this is where, for me, a physical currency like the euro has had its challenges. So interest rates obviously affect the foreign exchange rate, that affects import and export value, and the ability for people to either travel inward or outbound from a country from a tourism perspective. So in addition to that, when we get through difficult times, the use of printing money, quantitative easing, also has a direct effect on the exchange rate. The amount of money that's in supply within the country, free, has a direct consequence on employment and other elements. When you get a large organization that's setting policy where there are different social characteristics and different economic realities across a large geographical area, it becomes very, very difficult for regions that are just not the same to be able to control their employment, to control their economic growth, to control their exporting ability. So a physical currency, for example, for the BRICS just isn't viable.
Yeah, I mean, I totally agree with you, and I don't think that was ever on the agenda. You only have to have a look at the situation with the euro, and I actually wrote an article back in 1999 for a now defunct newspaper called Securities Industries News out of New York, and the title of it was "The Euro: A Rival to the Dollar or a Poor Relation to the Deutschmark."
Yeah. So,
I'll let you draw your own conclusion to that one, Terry, but I think I was leaning towards the latter.
what was interesting, Rob, was before the introduction of the euro as a physical currency, there was a mechanism, the exchange rate mechanism, that was put into place to try and see what would happen with the different currencies and how you would control the basket of values amongst them. And it was an interesting idea. And I think as we look at introducing a virtual currency over the top of BRICS, it's a lesson learned that when that was put into place, there wasn't, in my view, there weren't sufficient controls against speculation. And we know what George Soros did to the British pound during that time, for example. So even with the use of a virtual currency, and the exchange rate mechanism was sort of an attempt at a virtual normalization. If we're looking at a virtual currency for the BRICS, we need to make sure that there are controls in place that prevent this level of speculation that can basically lead to almost bankrupting one of the world's largest economies.
Yeah,
I mean, I think the radical difference back then was the fact that we didn't have the internet to an extent, and the banks were actually a lot more powerful. I mean, now the number of banks is a lot less powerful, and and the countries that they could manipulate. I mean, trying to take on Russia was great in 1998, and you could do it. Now they don't have the firepower. I mean, Russia, if you notice, when they attacked its currency in 2022, and the shock and awe, and the ruble will be rubble, hasn't actually had that dramatic an effect. Particularly when Russia says, okay, we don't actually need the dollar and we don't actually need the euro. And currently, 90% of the transactions between China and Russia are carried out in yuan, right? Large amount of trade between Russia is already in India, is already in rupees or in reals or in various other bits and pieces, etc. So, you know, the ability for the outsiders and meaning the US and the Western so-called investment or disinvestment banks and speculators, the same level isn't there. I mean, they managed to get away with it to a great extent using the Chicago Mercantile Exchange and the London Metals Exchange as far as commodities are concerned, and attacking Russia and whatever to try and destroy. But I mean, now the vast majority of Russia's metals trade, for example, takes place between the mining company and the person, factory, refiner, etc. So Norilsk Nickel's dealing direct with China. In fact, it's actually looking to move one of its dirty smelters from Norilsk itself into China with new technology, and it will ship the raw materials. So, you know, all of the things are changing, and the West's influence, and that's the major thing we're talking about here with the introduction of a new trading style currency, is the BRICS will have moved away from the hegemon of the US dollar and its control over finance, because that's the fundamental thing behind BRICS, is to get its members and those who want to work with it away from the dominance of the dollar and their ability to interfere or even destroy economies.
Yeah, absolutely. And you mentioned there, you know, the trade that's now occurring between Russia and China being done outside of the dollar, the settlement mechanisms as well. And that's something that the BRICS really needs to expand. And I think with that, you know, there are a couple of comments we were talking about before we went live around the BRICS Pay and the BRICS Bridge, and whether these things will really be able to expand the usage for commercial organizations, I mean, down here in Brazil, there's so much in the way of commodities, which is immensely valuable worldwide. Brazil has a tremendous farming community and has oil and other things that fit in with contracts. So how we can get other organizations to be able to use that trading mechanism outside of the massive contracts that have occurred recently between Russia and China. And I think as we look at those two mechanisms, BRICS Bridge and BRICS Pay, the question is, are they relevant? Will they work? Can they work? I don't know, Clive, can we talk a little around that now?
Yeah, actually, I'm going to bring up this, which was an article, and this sort of, well, we had this bombshell, right, from Escobar, from Pepe. So so last week on our channel, we discussed Pepe Escobar's latest bombshell about the unit, a token currency that the BRICS group might adopt. So in February, during a G20 meeting in Brazil, Siluanov, the Russian finance minister, and senior BRICS finance ministers introduced the BRICS Bridge payment system as an alternative to SWIFT. So despite leaders like Putin and India's Foreign Minister Dr. Jaishankar stating, quote, no common currency for the BRICS at the 2023 BRICS Summit, maybe can you explain which proposals are realistic and which are more speculation?
Yeah, sure. So they're actually both important and valuable. They're different parts of the same thing. So when we talk about the currency proposal that has come from the group out of Russia called the unit, that this is, I guess, in layman's terms, we could call it the Bitcoin. It is the currency name itself. It's really important to have a currency that's named. My personal view is that that currency name, the control of the currency, needs to be run by some form of organization that represents all of the interests of the BRICS. If not the NDB, the BRICS Bank, then an organization that fits within the context of the NDB in some way. So whatever it is, yeah, we need a currency name of some description, a virtual currency. With regard to the BRICS Bridge, BRICS Bridge for me fits into two characteristics. And of course, the idea of a BRICS Bridge has been around for some years now. The two elements are we need a political framework within which the monetary policies of the countries are respected for cross-border transactions. And that political agreement is something that certainly in Kazan in October should be discussed, and I'm sure will be. Next year here in Brazil, we have the privilege of hosting BRICS. It is something that we'll be looking to bring to the table to discuss how the political framework and economic framework work. And then underpinning that, there needs to be infrastructure, a system that is able to support these transactions. And when we talk about that system, the transactions, for us, they have to be done on blockchain. It's tokenization. It's the use of smart contracts. And for that reason, it needs to be scalable. It needs to be confidential. What we mean by confidential is if I'm sending money to you, Clive, I don't necessarily want Rhod to know that I'm sending you money. There's nothing untoward in that. I wouldn't do that with a normal bank anyway. So the transaction needs to be confidential between the two parties, and it needs to be highly secure. So finding a system that is highly scalable, secure, and confidential that can support this virtual settlement across different countries is important. There was an exercise that was run by the Bank of International Settlements last year in Switzerland. They invited companies from around the world to see if they could provide a technical solution to a virtual currency settlement between China, India, and Brazil. The winner of that wasn't a blockchain solution. The second place organization was actually a Brazilian company out of Rio de Janeiro, Parfin. And they provided a mechanism whereby if we were to imagine a Chinese company wants to import coffee, so they would agree the contract terms with a Brazilian coffee provider, large-scale contracts, 100 million, whatever. The moment then comes for the payment, and the commercial Chinese company would take the money out of their account. It would be sent to a central bank depository, tokenized as if it were a virtual currency within a value exchange network. The foreign exchange would be agreed between the Chinese and the Brazilian bank. The Brazilian bank would then authorize the Chinese to freeze that token so that that is no longer distributable within the Chinese economy. So we're not making more money, we're transferring money. The token will be created again inside Brazil, within Brazilian reais, and then sent back through the system to the commercial bank so that it's available locally. That system was demonstrated within the Bank of International Settlements program, and it was shown to work. So when you look at those three elements, that is actually a BRICS bridge in technology that's already there, can be used. We look at the political aspect, which is the most difficult part, and it's the part that needs rigorous debate over the course of the next 6 to 9 months. And then we have the name of the currency itself. We can call that the unit. That's perfectly fine. Here in Brazil, as with many countries, the progress that the Brazilian government has made on the creation of a central bank digital currency is exceptional. It's really been going well. The country has run pilots for settlement on this. They're actually using the same system from PAFIN as one of the three organizations that they're using to see whether they can support the scalability that would be required. And to give you some idea of scalability, it will apply to all BRICS countries, but here in Brazil, when they move to instant payments, which isn't a blockchain solution, that was some years ago, a system called PIX. PIX last month transacted 5 billion transactions with approval through the central bank. So, these are large scale things. And as commercial organizations move towards using this settlement mechanism, then we'll see similar transactions. What's the advantages here? Firstly, the smart contracts within the system will determine the contract conditions. Those contract conditions can include what are the two currency pairs and what is the exchange rate that will be used. The settlement is all but instantaneous. So the second I press the button, because it's blockchain, I own that money. Or that money was sent, I don't own it anymore, I own the commodity. Title to the commodity is mine. Those two elements are really, really valuable. And because of that, this is really the way that the world economy needs to go. The third element, which is important, is all of this has nothing to do with a global controlled payment system. It's all done over a value exchange network with people owning their own nodes within a network. It doesn't affect the domestic fiscal policy of any of the BRICS countries that's involved. And for that reason, it probably, as Rhod said, it is the most important thing that BRICS needs to work on right now, is to get this set up and running. It is the solution to having, or to taking away the reference point of the US dollar for so much of world trade.
Also, Terry, it's interesting within the likes of Brazil and places like Argentina, the dominance of the dollar means they have to buy dollars to service their debt. Now, when you're as heavily indebted as countries like Argentina are, and let's look at places like Sri Lanka, a potential member or BRICS member, or Ethiopia that is a current BRICS member. They have substantial debts, and that debt is all in US dollars. So they have to, if their currency has weakened against the dollar, their effective repayments keep increasing. Now, this is where this type of currency or unit, token, whatever, is actually going to be a boon and get away with dollar debt servitude.
Yeah, that's true. That would be definitely good. Yeah, go ahead, Terry.
Yeah, although the foreign exchange elements, the price of one currency against another, that remains a challenge. And it is one of the things that the BRICS countries need to debate and figure out, particularly to try and prevent speculation and to ensure independence of each country. And for me, that's so important. The euro was
Terry, I think, sorry to interrupt you. I think that's where a basket of commodities comes in.
Interesting idea.
5 major commodities, be it oil, natural gas or LNG, gold, wheat, whatever. You could do a basket of 5 and you have a set price that it moves up and down and the currencies are set against it. That's one of my suggestions.
And that goes back almost to the same mechanism that existed in the beginning with currency, which is the gold standard. It's a commodity.
Yeah. Where obviously gold is not something that they want to be on the table. But commodities, particularly as everybody's using them. I mean, every country in the world buys oil. Every country in the world buys wheat. Right?
Yeah.
You know, so those, and every country in the world has at least some gold. So there's 3 of them that, you know, are the focal points. And it takes away the control of the mouse click of creation of currencies or creation of dollars, which means that the dollar can't then, it suddenly just can't create. You can create dollars with mouse clicks, but you can't create oil with a mouse click, and you certainly can't grow wheat with a mouse click.
That's for sure. Actually, it brings up, which is sort of my other, because what you're sort of saying too, Terry, and you, Rod, I'll just say what I was going to ask you was, could the BRICS common currency as a settlement token, which you was talking about, for international trade balances be feasible, or is it the BRICS Bridge payment system a distinct initiative? But more to that is, how would it differ from traditional currencies like the euro, and what advantages does it offer member countries?
So they're different elements of the same thing. To answer the first part of your question, you know, the digital currency itself, the token, we can give it whatever name, and the settlement mechanism behind it, we can call it a bridge. We just need so the technology to be able to create the token and the bridge, to an extent, for what will be used today, the scalability, confidentiality, and security are all available today, right there.
Yeah, very common. Really.
What's needed is the political will and the agreements as to how this will operate, and to agree the role of some sort of, I hate to use the word central bank for BRICS, it's not the right word, but an organization that is open, flexible, understands the rights to national sovereignty, that can look after the system of tokenization that would exist. With regard to how does this differ from the euro, so as a physical currency, the euro just drives so many challenges. I mean, you know, the UK never entered into the euro for very important reasons. The largest foreign exchange market in the world by far at the time, and I believe even today it probably still is by a nudge, is what's called cable, which is trading between the British pound sterling and the American dollar. So the minute you put that into the euro, you provide a tremendous weight to a currency where you've got centralized interest rate approval, irrespective of the domestic situation of a particular country, that will just affect dramatically the balance of payments. It affects employment and unemployment. It affects economic growth. When we're talking about a virtual currency, it's, for me, maybe I'm just a simple animal. Maybe the problem is that I'm not looking enough at the complexity. We already know what the foreign exchange is between a Brazilian real and a Chinese yen. We can go on the internet and type them in and we can see a value. Now, it is true that there are elements that support that value, but we're not looking at doing anything different for that for the companies that are involved. They could agree on the internet, have a look and Google, type in yen versus real. They'll come up with a number and they'll say, look, you know, the sell point is this, the buy point is this, the mid-market price for spot right now is this. That's the deal that we're going to put. We're going to write that into the smart contract inside the blockchain system, and that's the deal. That's it. As a secondary stage, I would agree that there is a need for some sort of exchange rate agreement. There's certainly a need for liquidity providers within that mechanism. But
comes back to commodities again. back to commodities. You're trading commodities, so they've got a value. That's the thing. Is commodities have a intrinsic value. A dollar is a piece of paper. It says it's worth X. A ton of coffee or a barrel of oil or 1 gram of gold has intrinsic value to somebody, and they will pay either 7,000 rubles for that 1 gram of gold in Russia, or they'll pay 23 rupees or whatever in India. So there you already have your intrinsic.
Yeah, no, that makes sense. And as you've said, Terry, maybe have someone like NDB, which would probably be an ideal institution because it has the BRICS interest at heart, and it also follows those principles, and it's demonstrated that too. So,
I mean, what you don't need, as I mentioned earlier when I talked about my article from 1999, is an over-wielding central bank like the ECB that would have difficulty controlling the economy in Germany, never mind the economies of Germany, France, Portugal, Spain, Ireland, and all the various other disparate group of countries that is part of it, all with completely different style economies and social welfare systems.
Yeah.
The central organization needs to make sure the system is being technically used correctly. The tokens are being created, frozen, transferred correctly. And there's also a need for what in the financial markets we call discovery, which is price discovery. So it is important, for example, if there's a major contract struck between a Brazilian provider and a Chinese or an Indian purchaser, that in time, at the right time, not necessarily in real time, but perhaps at the end of the day or the end of the week or the end of the month, that people can understand what that price was and the reasons why, because that helps people to price future contracts. That's it.
Exactly. Right. Whereas what you don't need is political influence on the situation, which is what you currently have. What you want is a trading system or platform or whatever, where the value of a gram of gold is intrinsic to China, to Brazil or whatever, or a ton of coffee is cost the same to a Russian as it does to a Chinese, etc. buyer when it goes into the system and comes out the other end.
I have to ask you though, because Rod, you brought this up, and because we're sort of mulling over this reality and what's being looked at, considered with you, Terry. What about in the case of like machine tools or something that's not a commodity based commodity? Would that be different in that respect? I mean, if you had a complex machine tool or a helicopter, no,
you would value it in the same way as you would have valued it when it cost, you know, an airplane cost 10 million or 20 million US dollars. It would suddenly cost, you know, 100 million yen, or, you know, 5 trillion or 5 billion rubles. I mean, you can work that out against the commodities basket, etc. Because if a barrel of oil used to cost this, I mean, you get away from the use of the dollar, but intrinsically, if you're using much the same value system.
Oh, okay, yeah. I just wanted to clarify that for myself, obviously, but for the audience too.
A gram of gold costs 7,000 rubles, right? Whereas in the US, it costs $2,419 per ounce currently, right? But if you base it on the 7,000 now and forget the dollar, and the 7,000 stays as the base, and it goes up according to Russian production and the trading on the Dubai Commodities Exchange for gold, or the Shanghai Gold Exchange in China, or the Moscow Stock Exchange for gold, and those three are correlating their price for gold, there you have the gold price.
Yeah, I mean, that's what Bretton Woods was originally, but then they stuck it with the US dollar and whatever, you know, and then,
correct.
I mean, that was to forestall speculation. I mean, one of the things was to facilitate trade, but it was also to stop speculation, which Terry's mentioned, you know, because that's a big issue. And then money on the third party transaction too. So yeah, and we don't want that. We don't need that. We don't need third parties. I mean, really, not just taking their cut, because they do perform a service, but they're gambling on it too, right? It goes in the market.
That's where you look at situations like the London Metals Exchange, like the Chicago Commodities Exchange. Yeah, the London Metals Exchange and the LBMA, for example, the London Bullion Markets Association, trades somewhere 2 million times more in paper gold than it does physical gold, right?
Yeah,
it's a casino. They're gambling up and down on what's happening, and that's the same as on the Chicago Mercantile Exchange. They're not trading corn or wheat or whatever. They're having a punt.
So there's been a lot more control that organisations, that regulators have tried to impose upon banks following the 2008-2009 crisis, right? The CDO and MBS crisis, where people were selling mortgages to folks who honestly couldn't afford it, should never have been sold. But the worst was taking bags of mortgages, plugging them together, calling them a collateralized debt obligation or a mortgage-backed security, sending them off to another financial institution that really doesn't understand what Johnny down in Kansas is able to pay and not able to pay. And that's just pure speculation on the market. We need to go back to what banks are supposed to be there for. The only, in my view, existence of a bank is for trust. It's supposed to be for trust. I earn my money, you're going to pay me my salary. I'm a little concerned about walking down the road with $1,000 in my pocket, so I deposit it into my bank because I trust. And when I go to a shop and I give them a piece of plastic and say, this represents value, it's about trust. And we've lost that because of speculation, because of greed, because of manipulation, because of unfair competition. Excuse me, we've lost the trust. We need to bring it back to trust. It's about global trade. That's what it is. So one organization can trade with another. A mediating entity in the middle needs to be trustworthy. They won't be if they're allowed to speculate.
Terry, that leads on to the point where BRICS and Russia are looking to launch their grain exchange. Probably going to be set up in Egypt, where they is a trading platform for grain, away from the Chicago Mercantile Exchange and away from the other places where the speculation, where the producers and the consumers can actually work together and get fair prices for those who need to make bread, pasta, and whatever. I mean, you only have to look at some of the victims who are now members of the BRICS from the Arab Spring. The Arab Spring was caused by high prices for wheat and cooking oil. When you can't feed your family, that's when you don't care whether you live or die, and you take to the streets. And that's what happened. And one of the things about BRICS is the setting up of these type of situations are not going to occur. If you have something like the BRICS Grain Exchange, they take the whole grain flow out of the hands of speculators, and you have it in the hands of countries that are actually, yes, they want to make a profit. They're not going to cut their own throat, but they'll sell grain at a price that other countries can afford.
Yeah. For the welfare of the population. Yeah. Before you guys keep going, because I think the audience is enjoying this, because I certainly am. But I do want to get through all the nitty gritty that we sort of got ready for this, right? Because having you on, Terry, hopefully you can come back. You're not too busy, but we're almost on an hour, and usually the director, the producer, says, no, we've got to stop for an hour, but we're going over because he's not here tonight. He's probably watching and he's going, Clive, you're almost at, no, anyway. Let me ask you. Actually, I've got this, so let me bring this up. Which was the next thing. I'm not going to this, but Rhod actually brought this article, which was very good, from the Valdai Discussion Club about BRICS financial settlements. And that's obviously what we're talking about. But he did have that on his own website, so just wanted to show that. But with the backdrop of the Brazilian economist Paulo Testa's insights on BRICS financial settlements, including the creation of a reference currency and the multipolarization of the world economy, can you help us understand how these views align with or challenge recent proposals like the unit token currency, the BRICS Bridge payment system? Given the skepticism from leaders about the common BRICS currency, how might these proposals realistically unfold? What advantages could they offer over traditional currencies like the euro? Hopefully that wasn't too much. Yeah.
So I think when we look at a BRICS, is a BRICS currency really needed? Well, I think, to give it a name and to put it a token, it's fine. Do we actually want, because at some point in the future, all of the world's economies, 20, 30 years from now, it's all going to be digital.
Yeah. I've got a question about that too, so.
So it's all going to be digital at some point. It's moving that way. There are major events underway, even with folks like MasterCard and even SWIFT themselves are tokenizing. We've seen several countries, one of the Caribbean countries is the first to really introduce a CBDC that's being used extensively throughout the population. And, it's an interesting example of what can be achieved and what will be achieved. So when we look at what BRICS needs to do, so we come back to the three elements. Let's name a currency, fine, if we want to do that, but that really just represents the exchange rates that exist between the countries that are there. And the key question is, how do you provide liquidity and oversight to make sure that's not abused? That's one. The second is the political will and the framework agreement. And the third then is the infrastructure. And the BRICS Bridge is the infrastructure. It's just a name for the infrastructure. So at the time that it was published, the infrastructure for that really wasn't developed out. There are a number of organizations worldwide. I mentioned one here earlier that has been leading the way with that. The BRICS Bridge is an infrastructure that enables an organization, whether it's BRICS themselves, to tokenize money, to tokenize assets, as in the case of commodities, to create a smart contract that matches one against the other, to press a button and get settled. Just to give you very briefly an example of other mechanisms that have been, or other products that have been used like this. Here in Brazil, one of the banks is the largest, the owner of the largest second-hand car site in Brazil. And Brazil has a little bit of a reputation at times, which is not deserved, but making sure that the title of the car and the money exchange hands at exactly the same moment was a challenge they looked at. So a mechanism was built that tokenized the ownership of the car, tokenized the money, and pressed a button and created a direct, immediate exchange between the both parties, so that the car was then immediately owned by the person who had just that second paid the money. A second element for that was then developed for another Brazilian bank, where a car dealer wanted to be involved, and that car dealer wanted to offer financing. So the finance contract also fitted inside the smart contract, and all three elements were settled. So the money was paid, financing contract was open, and the car was exchanged. A fourth element that's now being developed for that is the insurance that's required because the car's being financed. So that's also coming in as part of a smart contract. And I use this as an illustration just to show what can be achieved. So when you look at cross-border contracts that might involve things like letters of credit, which is very, very common in the purchase and transfer of commodities, the transportation contracts that are required, that all of those elements can be created within a single smart contract. The price can be agreed between two currency pairs, between the companies, not between the countries, based on what their belief is of the value that they're going to receive. And the thing's completely closed, it's settled immediately, done over a BRICS Bridge, which is just the name for the infrastructure, using, if you like, a BRICS currency, if you want to give it a name, that just completes the circuit. So all of that's available right now. It's really happening.
That's ready to go. We're not waiting for Kazan summer.
It's ready to go if the political will is there and they press the right buttons. Now, the thing, what we're talking about, and Terry's absolutely right. I mean, when he said about the 4 elements or the 6 elements it could be, they could all be built into that with eloquent ease. What it is the agreement of, you know, is India going to agree with something that China wants or Russia wants and the Saudi Arabians, whatever. You know, it's a matter of them all sitting round the table, the finance ministers, the commerce ministers, etc., and sitting down and going, right, great idea. Let's all put our thumbs on it and thumbprints, deal done. Let's announce it. Let's make it happen. So that's a political will that will make it happen. Now, one of the biggest problems with BRICS is India. India is closer to the US than it is actually to any other member of the BRICS, like Russia or China or even Brazil, etc. It's to a level of dependency. Now, breaking away completely from the US dollar is not something, in my opinion, that India is ready for yet, given that a lot of its business and its companies are pretty dependent on the US. So,
and I want to come back, Rod, let me pick your comment up, because I want to come back to where Clive started.
No problem,
with my little article where we said BRICS is about freedom, not about control. And if India wants to trade everything in US dollars, that's a choice. That's perfectly fine. Otherwise, if we're saying you have to use a BRICS exchange mechanism to be able to trade with BRICS members, then we're going against the spirit of the thing.
No, I understand. I understand exactly where you're coming from. It's just that when I'm talking about the 3 main players that tend to dominate within BRICS, and you know, as we're all aware, that there's been problems between India and China. You know, they're not exactly best buddies. You know, although they are actually some of the largest trading partners with each other. However, so I'm just thinking that hopefully that will not become an issue and that they'll all agree. So that was my main point. Not about they're about to go to war or anything. It's just the political will, and I think that's the problem that we're always faced with: is the political will there to put their head above the parapet and say, "Let's do it."
Yeah, absolutely. No, because the conversation, you know, really has gone that direction, and yet I've got questions that have followed. You know, there's a few different things, but definitely from your insights, from you, Terry and Rod, in this conversation, I think there's a fair understanding where we're going, well, this, you know, this thing's in place, which is actually, I think, is new to the people that are watching this, because they may not really realize that, because you have some inside information. If you could actually, Terry, if you could just tell our audience about that, not inside information, but I mean, you are very familiar with an advisor to the guys that are actually creating the bridge and the pay system. And then obviously that's got to go for the tick or the thumbprint. But could you just say a little bit about that? Because I think that's where we're at. Yeah.
Well, first of all, let's please avoid comments like inside information. It has a different connotation.
Let's not.
I have no inside information to share. Yeah, I mean, so the company I mentioned called Parfin, they've been working very hard on this for some time. When the central bank down here in Brazil produced a central bank digital currency, they invited a few firms to look at whether they could be the infrastructure that would enable the tokenization. There are a number of challenges with that. As we mentioned on the PIX system, which isn't tokenized, 5 billion transactions a month is a tremendous amount of scalability. And when you're looking at blockchain, every time you create a new block, the mathematical calculation that's required for that block is quite heavy. So being able to do that thousands of times per second is a challenge. So Parfin have been working very hard in creating a system that is the most scalable. Certainly from what I've seen globally, and I follow and study this, as it stands today, it is the most scalable platform. They've also looked at levels of security and confidentiality, which are important. And they have a mechanism that pings between the different nodes within a value exchange network, just to make sure that there's a confidence level between the different points of the transaction, so that when a transaction comes through, it can be settled immediately without going through extra layers that would delay. One of the key elements with the blockchain and tokenization technology is instant settlement, and that it's something that for me has a much larger implication going forward. Now, for example, if you buy shares on the stock market and you sell them, and it says that you've sold them and the money's in your account, but it really isn't. It takes up to 2, 3, perhaps even 4, 5, 6, 7, 8 days, depending on the country you're in. But 2 days would be perfectly normal. So if you say, well, I want to take the money out of my account, my trading account, I want to put it into my bank account and use it, you can't. And you're sitting there, oh, it's not available yet, it's not available yet. Right? So that's what we call settlement time. So T+2 is now being moved to T+1, which is settlement the next day. T+1 represents a challenge if there's a foreign exchange element to this, because you have to do the foreign exchange transaction first, and then you can do the settlement of the equity into the account. But the markets and the DTCC in the US have also made these statements. They want to move to T+0, which is instant settlement or atomic settlement. The second you start talking about atomic settlement, the only mechanism that's sensible to do that right now would be using a blockchain. A blockchain is already the stuff that's underpinning the monetary transactions of the future. So that then opens up the whole issue. We've seen the US, they're trying to be a little more open around cryptocurrencies. There were some moves recently where the US allowed cryptocurrencies to be part of a portfolio. But the central bank digital currency in the US and Canada, even further behind, it's in debate. And one of the reasons is that it does provide freedom. It does provide a liberty of choice. It does provide the ability for people to create a stable coin that's based on something they really recognize, like a national currency or a commodity. Rhod, absolutely agree with that. And that then opens up trading possibilities that weren't available to us some time ago. So that's where the technology is today. It's getting more and more scalable, but the level of scalability for transactions between companies within the BRICS, retail would be another issue, but between companies within the BRICS, in my view, it's available right now.
Wow, that's awesome. That's really good. I think our audience should be very happy to hear that, because there's so much speculation about it, and alternative media can be a bit, as well. And then there's other people who just do it for the sensationalism, when actually, we're looking at a very optimistic view. We want to know, it's very important, like Rhod was saying, people need to eat, people need to have their work and their production continuing, their confidence in their businesses. So this is really important. But I wanted to highlight, because we have, the Think BRICS channel actually did a video about debunking to do with BRICS Pay, because there was a particular channel, anyway, I won't go into it, but they were saying like, oh, this has come out and it was fake news and we needed to debunk it. So there was this video we did, and you can see Anastasia here. Everyone loves Anastasia, and it was called What BRICS Pay Really Is and Isn't. So I encourage the audience to check that out. But I should ask you this, okay? Actually, no, this is the last one, okay? Because we're way over, and I could hear the director right now going, Clive, no, he's not.
No, I have to cook lunch at some point.
That's right, yeah. And I'm sure Rod's got to go, because usually he has to leave after. But this last one is very important. Last but never least, cash. What is your view on the use of cash in regards to the multiple proposals that are before the BRICS officials for consideration? BRICS News gets a lot of talk about digital solutions and systems, which you've talked about, Terry. It's very exciting. What about cash, cold, hard cash?
So, I mean, cash obviously for transactions that are of commercial nature between large organizations isn't relevant, right? Because even today, the bank transactions are being done. You know, the days of bearer bonds being transported by aeroplanes across the world, thankfully, is gone. I'm sure the plot behind many films. When we talk about cash on a retail basis, you're really talking about tourism-based cash. And there is a large market for that. I mean, typically around 75 billion US dollars per day is changed into foreign currencies for a tourism perspective. I have a personal view on this. I mean, tokenizing that stuff, in the future it will be done, but there isn't the scalability for all of the BRICS countries to be able to support that right now. So that's something for the future. So when we talk about physical cash, for me, and I actually, some years ago, I'd started developing a system around this, which I then just ran out of time doing other stuff. I think exchanging cash should be a social event. And I think the ability for me to publish in a secure mechanism on a site, and I'm going down to Australia, I'm going to come and visit a friend of mine, got 2,000 Brazilian reais, and I want to change that into Australian dollars. And if there's an Australian here in Sao Paulo who's willing to exchange that with me at the desk of a five-star hotel, I can ask the concierge if this is real money. Or when I arrive in Australia during the first day or two, and then for us to sit down and say, you know what, Terry, you're coming to Australia, there's some great things you need to see, but the most important isn't in the tourist guide. It's John's coffee shop round the corner. It's the place every Australian goes. You're going to really learn. That is a social event for me. And the fact that we exchange money with ridiculous spreads on it can be completely overcome by you and I when we meet in the hotel, going on Google and saying Australian dollar against Brazilian real, the mid-market spot price today is this much. I just say, okay, you know, give me $400.
Terry, that already exists. It's called Hawala banking.
Oh, perfect.
It's been going on for 2,000 years. It's basically it's mainly used, I understand, through Islamic countries now, but it goes back to the days of the old Silk Road, where you basically go to some banker in Hawala banker in the UK, and you give him £2,000, and you say, I want 20,000 or whatever, 4,000 Australian dollars when I land in Sydney in 2 weeks' time. And he says, okay, here's a little code. Go to this coffee shop in Sydney, meet a man called Arthur, give him this, and he'll give you the cash.
Right. That's interesting.
Now, it's not legal, as far as I'm aware, and it's unofficial, but it exists. I know it exists because I've seen it in action, but I say it's mainly used by the Islamic community in the UK and in Europe and in the Indian subcontinent, plus the Middle East. Workers in the Middle East, for example, who are from Pakistan or some of the other, and they're working in the Emirates, etc., they send home their remittances not by Western Union, but by Hawala bankers.
Oh,
I guess as ancient King Solomon wrote so many years ago, there's nothing new under the sun.
Yes.
Yeah, there you go. Yeah. I mean, it's a tourism.
It's just when you mentioned that, it just reminded me. I've seen. I mean, it's not that well publicized, obviously, because they claim it's used for terrorism or money laundering or whatever. But I mean, just to get onto the fact of the BRICS currency, etc. Now, I don't know if you've ever noticed, but I have, because I travel back and forward occasionally to the UK or whatever. Now, the only people who've been inconvenienced by the new draconian laws they brought in against money laundering is ordinary people.
Yeah.
Right. Money launderers are always 2 steps ahead, if not 5 steps ahead of every bit of legislation that the government ever brought in. Right. I mean, money laundering. What did they do when the euro brought in the $500 euro note? They stopped trading in £50 notes and $100 bills and started trading in them and doing their money laundering in €500 notes. I mean, and then they cracked down on you can't open a bank account or you can't transfer more than 10,000. They found all sorts of ways. The only people that actually got hit by money laundering laws are ordinary, honest, upright people.
So as a banker, I have to say that the AML legislation is really important, and they are constantly innovating. I agree with you. The money launderers, they're finding new ways to do it, and the regulators are trying to close the doors. Sometimes they get a little bit ahead, but sadly, sometimes they're behind, and it's a really important discipline globally to prevent.
No, I'm not against money laundering. I'm against the measures that it always seems to be the ordinary guy, the ordinary man in the street or woman in the street that tends to suffer the indignities of intrusion when they brought in laws that were only against terrorism. I mean, let's look at airports, right? The amount of, I used to travel back and forth between Moscow and London, and also went to New York and London, hand baggage only. And I would travel with vodka in my hand luggage, 2 liters, 3 liters of it, plus caviar into London, and then change that into bars of chocolate and various other things and decent malt whiskey on its way to America, right? All in my hand luggage. Suddenly, after 9/11, none of this could happen. Now, why? Because we're preventing terrorism. So preventing a middle-aged Scots guy flying between Moscow, London, and New York with some whiskey and some caviar is preventing terrorism. You see my point?
That is like,
Yeah,
as the great Mark Stein once said, the only thing in England that's policed these days, that isn't policed these days, is crime. Everything else is policed.
You're on it, Rod. No, I mean it's good. It's a good example, and but we've got to let Terry go because he has to actually go. See, I've gone over, and now I've kept our important guest. But thank you very much, Terry, and thank you, Rod. I'll end off quick. I'll let you go. Okay. Thank you. See you again soon. Okay, Terry. Really appreciate
it. Thank you very much for having me. It's been great to be part of the debate with you.
Awesome. Okay. Thank you, guys.
Bye-bye.
All right, we'll end it off. Thanks again, Rod. I really appreciate it. You love your stories and stuff. It's very valuable. Like having you here is really quite valuable. With such a lot of experience and the breadth of your experience, and you make Terry feel very comfortable. I think too, when we discuss it, he comes up with stuff. It's really good, and obviously your contribution is invaluable too. So definitely. Thank you very much. And I've gone too long. I've kept you because usually you scoot off. But I'll let you go and I'll end off.
All right, mate. Take care. Cheers. Bye.
There we go. Well, I hope you've enjoyed this sort of special edition of BRICS Brief. I'm sure Terry will be back with us. He has some very special insight with his work. So we will be back next week. I don't know what we've got next week. We'll see what happens. There's a lot happening, with the Iranian president, and I think it was the foreign minister that perished in a helicopter crash. So we may look at something around that. There may be, as that develops, that's going to develop very quickly, especially at this unfortunate period in our history. Joining us. I won't keep you guys any longer either. We'll see you next week. Please like and share this. Go to our Substacks. I'll just show them here. Telegram, particularly Telegram, because then we can show you guys everything that's always posted up there. But subscribe to our Substack, and if you'd like to donate, of course, that's always appreciated. But we'll leave it there. Thanks very much, everyone. Ciao.